Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Oil jumps higher after a report suggests Israel is preparing a potential strike on Iranian atomic facilities, raising concerns about the fate of US-Iran nuclear talks. The UK pauses free trade negotiations with Israel, adding to international pressure over aid and its expanding military operations in Gaza. Plus, Elon Musk tells us he's committed to leading Tesla for the next 5 years. And on political spending, he says, I've done enough. We'll bring you more from our interview at the Qatar Economic Forum. A very good morning. Welcome to Wednesday, and let's check in on these markets. We've got futures pretty flat here in Europe, but pointing lower stateside. Yesterday, you saw the S&P taking a breather after that 6-day run. It's been up about 20% from its April lows, but looking set to falter that rally again today. Flipping the board over to the cross-asset picture, because that's really where we're seeing the action, particularly when it comes to oil, because of these geopolitical headwinds. This report from CNN that there's new US intelligence suggesting that Israel is potentially preparing for a strike on Iranian nuclear facilities. So you're looking at Brent there at $66 a barrel currently. You've seen it being taken out on the dollar, and in reverse, you've seen a gain for the Swiss franc and the yen. And then look at the 30-year yield there at just under 5%. This as the bond vigilantes are reawakened about that US fiscal largesse. We'll get into all of that throughout the programme, but let's cross over now to Avril Hong in Singapore with an update on Asia markets. Avril.
Yeah, Lizzie, we're seeing Asia stocks running higher, but investors are still on that lookout for fresh clues on whether these gains can sustain. In terms of the sectors, we're seeing healthcare, chips, and energy stocks doing pretty well, outperforming. And of course, in energy, that complex is tracking the gains in oil prices. It's also worth noting that Morgan Stanley has upped its targets when it comes to Chinese indices. It sees structural improvements, and this follows on from developments on the tariff front, on earnings as well. Now flip the board, because the market we've also been focused on is Japan. And if you look at the topics today, we're seeing the insurers being the drag, but the banks are powering through on the topics. And this is against the backdrop of higher yields in the country. Now, yields overall in Japan have been climbing, and this is against the backdrop of concerns about its fiscal health at a time when the Bank of Japan is buying fewer bonds. And of course, those lingering questions about its credit rating, and against the backdrop of what happened to the US's rating via Moody's. So that all kind of culminated in the 20-year auction just yesterday, which was disastrous in terms of very weak demand. And today we're seeing the extension of losses on the long end of Japanese bonds, particularly on the 30-year, which at one point hit the highest on yields on the 30-year that we've seen since it was issued way back when in 1999. Now flip the board. I just wanted to give you a sense as well on what we're seeing on the spreads. If you see in terms of the curve in Japan is actually that bear steepening that we're seeing overall on the JGB curve. Lizzie.
OK, Avril Hong in Singapore, we thank you for that update on Asia markets. Now let's pivot back to oil, because it's higher after this CNN report that new US intelligence suggests Israel is preparing for a potential strike on Iranian nuclear facilities. Let's get to Bloomberg senior energy reporter Stephen Stapczynski with more from Singapore. Stephen, what more do we know? And if this were to go ahead, how do you see it playing out in the oil market, given the potentially wider impact on those US-Iran nuclear talks?
Right. I mean, all we know at this moment is a CNN report is saying that there is U.S. intelligence that suggests that Israel is preparing to hit the nuclear sites in Iran. This has been something that they weighed in the past, and potentially they didn't go through with it because of the line that then President Biden was holding. It's a new world under Trump. It's a new situation. So the market is reacting to that. Now, let's play this out. There are different scenarios that could happen depending on how Israel attacks, if they attack Iran. If they were to also target oil production, or if oil production in any way is affected, that's taking about 1 million barrels a day off of the market. According to Goldman Sachs, that will be about an $8 reaction, upward pressure to oil prices. Also, there is the risk that what does Iran do next? What's their retaliation? Do they close the Strait of Hormuz, a key passageway for a lot of the crude oil to the rest of the market? You could see prices rise even further because of that. Now, this is all just a risk. It's unclear what will happen, but clearly the market is looking at this and they're a little bit worried. And you are seeing the reaction from traders, and that's why we're seeing that about 1.6% move up in Brent today.
Yeah, oil at its highest level in a week. Stephen Stopczynski, we thank you, our energy reporter out of Singapore, for laying out those possible scenarios. Now, staying in the Middle East, the UK has announced a series of measures to punish Israel over its actions in Gaza, including a pause to free trade negotiations and possible sanctions. For more, we're joined by Bloomberg's Dan Williams in Jerusalem. Dan, good morning to you. What more can you tell us about the international pressure on Israel's government and how it's being received?
For now, Israel, at least publicly, would appear to be rolling with the punches. These are sanctions, if you like, measures being taken by the UK, also within the EU, which are quite slow rolling in the sense that they are processes that are now being slowed down, may eventually be halted. Processes, Israel says, were nearly, in some cases, weren't quite near fruition in any event. Israel's priority is finishing this war with what it would define as victory. To hear the Israelis tell it, it is now in the midst of a final push, what would appear to be a final push, a 3-month-long expansion of operations in the Gaza Strip that it says will bring about the defeat of Hamas and the recovery of the remaining 58 hostages held by them. However, that has brought with it very deep humanitarian trouble in the Gaza Strip, warnings that famine could be imminent given Israel's 11-week stoppage of aid imports to Gaza. Israel's been trying to deal with that separately by bringing in a stopgap amount of food, which it says should be enough to bridge the gap between now and next week, when an orderly food distribution system should be in place, administered by American companies.
OK, Dan Williams out of Jerusalem, we thank you for that crucial update. We've got a busy day ahead, and just at the top of the hour, we're going to be getting the latest UK CPI numbers. We're expecting a rise at the headline core and services levels in April. We're also expecting results from M&S and JD Sports. And then at 9 a.m. London time, we'll get the ECB's financial stability review. We already know that it's going to include a note from economists warning that the escalating trade tensions have emerged as a significant concern for financial stability and the global economy as well. You can set yourself up for the day by looking at the Daybreak newsletter. Just go to DAYB Go on your terminal for all of the latest headlines, including that potential strike that CNN is reporting based on this new US intelligence from Israel on Iranian nuclear facilities and the impact that it is already having on the oil market, despite this just being a report and potential signs of a strike. But coming up on the programme, Elon Musk on his future as Tesla CEO, his pay packet and the impact of his politics on the car maker's sales. We'll bring you more from that wide-ranging, headline-making conversation from the Qatar Economic Forum. It's coming up next. This is Bloomberg.
This week, Bloomberg brings you live coverage from the Qatar Economic Forum. Bloomberg Horizons Middle East and Africa and The Pulse will be broadcasting live from the conference floor. Then, throughout the day, we'll bring you all the highlights from the key policymakers and market movers on the issues confronting the global economy. Live coverage from the 5th edition of the Qatar Economic Forum continues this week right here on Bloomberg Television. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, Elon Musk says that he's committed to leading Tesla for the next 5 years and plans to dial back his financial involvement in politics. He spoke in a wide-ranging interview at the Qatar Economic Forum in Doha.
I think In terms of political spending, I'm going to do a lot less in the future.
And why is that?
I think I've done enough.
Well, Bloomberg's Michelle Hussain conducted that market-moving, nail-biting interview with Elon Musk, and I'm pleased to say she joins me now from Doha. Good morning, Michelle. It was an incredible conversation, I have to say. I'd love to know what the response was in the room from the investors listening to Elon Musk. He says that they should be confident in Tesla. Is that the vibe you got when you were listening to him?
Certainly, many of those in the room are people here in Qatar, Sovereign Wealth Fund and others who have backed him financially over the years. So he was among friends in terms of the people who were in the room. I think for me, the standout thing in the interview was that over the course of the nearly 40 minutes in which we spoke, there was a real combination of Elon personally, where he showed that he's personally upset by the attacks on Tesla cars and car dealerships. He also was extremely riled about South Africa's black ownership laws, something that, as Bloomberg reported yesterday, he might be getting a workaround for Starlink. But at the same time, within the interview, there was very specific information relating to his companies. So he confirmed that he plans to be Tesla's CEO for the next 5 years. He told us that Starlink may well have a public listing at some point in the future. He told us that SpaceX is not going to go into the weapons business. So here is someone who has immense influence, reach, power and vision, who's transformed more than one industry. And I think we saw from him both the corporate leadership side and some of the personal elements.
And of course, the conversations at the Qatar Economic Forum have been coming. You've had a lot of references to Donald Trump's visit to the Middle East just before it. I wonder what the response has been to Musk saying that he's willing to perhaps pare back his political spending. That was another key line out of your conversation.
Yes, in the Middle East, I think much more interest in him as a person to invest in, a person to back through his companies than his political side of things. But it was very striking what he said, although he did leave the door open when he said he plans to spend a lot less on politics in the future. He also added, unless I see a reason to spend. So a lot can change. Clearly, his support for Donald Trump and how much he spent on the last U.S. presidential election grew significantly from what he first envisaged. So I think this could be an area where there is room for negotiation, if you like, where perhaps he will say to the administration or to other Republicans, this is an area where I see a need for you to do something, and that leaves the door open to further political spending. And also, he spent such a huge amount on the last presidential election, more than $250 million, that spending less won't be difficult.
OK. Bloomberg's Michelle Hussain, we thank you for that incredible conversation from the Qatar Economic Forum. Well, let's bring you another conversation from there. Qatar's wealth fund is set to see its annual outlays into the US double in the coming years on the back of a $500 billion investment pledge. Qatar's Investment Authority's CEO spoke with Bloomberg's Bessent about the fund's investment outlook.
We are thinking hard in terms of underlying risks. So the interest rate environment was much higher the past few years. Now we're thinking is how much should we allocate to fixed income, for example.
Interesting.
Right? In a world where there is a lot of challenges, you may end up investing in businesses that are not necessarily fixed income or credit related, but they have similar attributes and could offer you more growth. So to answer your question tactically, I think we're revising very deeply how much we should have in fixed income as a conservative asset class. And we're thinking very deep also some of the traditional asset classes that we have, and whether we need to increase or decrease some of those asset classes as well, like infrastructure and real estate.
Let me ask you a question about your AUM, because His Excellency earlier in the morning talked about the fact that new inflows are going to be coming in. What is your expectation for how big the fund is going to be by 2030?
We haven't run the final model, I'll be very honest with you.
Roughly?
We haven't run a model, honestly. I don't really have the exact number. Also, it will be bad because they may say a number and then underperform as a fund and not meet it. Because, it would have to come from two factors. First, investing wisely to outperform and get there, and then the inflows. So I don't want to hold myself accountable for underperformance.
Okay, but assuming that the fund continues to grow in size, which I think is a fair assumption, we don't have to pin down a number, is that going to change the way you invest? Because you will have to invest for opportunities that can give you scale?
Definitely. So QI performance has been strong, and we expect with some of the things we're doing internally for it even to be stronger. We strengthen it through specializations and focusing on the right areas and constantly revising and thinking about our asset allocation policy. But as the fund size grow in size, this will push us to have even longer duration on the portfolio. So we can take longer term bets and themes and industries and specific technologies or other businesses and take advantage of the liquidity premium to underperform. So I don't expect major change in the style, but I think it will be more refined and will focus on areas to take advantage more of our ability to have a larger fund and also think of longer duration.
Fair to say perhaps a bigger emphasis on direct investments then in the future?
That is Qatar, you mean?
Yes.
I mean, we have a good emphasis on direct investments. A lot of the partners we have been and think of globalization. A lot of them think about supply chain solutions, decentralizing industries. So from our mandates, it's our responsibility to pass them along and be the kind of holding the hand and try and introduce them to the domestic stakeholders to encourage them to think of Qatar as a destination. And starting as an investor is also good because they've seen when we promise, we stick to our words and we stood beside our partners in good time and difficult times. So it resonates when they think that you're inviting them to have business in Doha.
Yeah.
So that was the CEO of the Qatar Investment Authority. The Qatari government is the underwriter of the Qatar Economic Forum, powered by Bloomberg. And do stay with us for more from the Qatar Economic Forum. Later today, we're going to be speaking to Donald Trump Jr. and Omid Malik from 1789 Capital. Plus, look out for conversations with Ted Leonisis from Monumental Sports and Entertainment and the TCW Group's Katie Koch. Plenty to look forward to. But coming up right here on Daybreak Europe, South Africa's president strikes an upbeat tone before a crucial meeting with Donald Trump as the country tries to repair relations with its second biggest trading partner. We'll go live to Johannesburg with the latest next. This is Bloomberg.
We chose not to participate in this year's G20 hosted by South Africa, either at the foreign minister level or the president's level. And it had a lot to do with some of these issues, in addition to some of the issues they brought on their agenda, which we don't think reflect the priorities of this administration.
US Secretary of State Marco Rubio there at a Senate Foreign Relations Committee hearing yesterday. He went on to say that South Africa has, quote, consistently been a vote against America's interests time and again. This as South Africa's President Cyril Ramaphosa is set to meet with Donald Trump later today in an effort to repair the frayed ties between the two countries. For more, let's bring in our Africa senior reporter Anthony Squasin out of Johannesburg. Really good to see you, Anthony. Good morning to you. Just give us the backstory here. How did the relationship become so damaged between the US and South Africa, and how consequential actually is it for South Africa?
Thanks. So it's been troubled for quite some time. I mean, I think we can trace it back to the beginning of the war between Russia and Ukraine, where South Africa didn't unequivocally condemn Russia's invasion at the time. With that US administration, that was seen as a big problem. Then it's part of the BRICS economic grouping. So those are, that means it's quite close to both Russia and now Iran, which has joined BRICS. So that's also problematic. But I think the biggest problem was early last year when South Africa filed a genocide case against Israel in the International Court of Justice. From what I'm hearing and what we're reporting, that is a big, big problem for the US, and they're quite angry about it.
OK, and so what's President Trump been also saying about Afrikaners, and why has that become such an important issue for him?
Well, yes, it's become a very divisive issue in South Africa because earlier this year, President Trump said that South Africa was seizing the land of white farmers, predominantly Afrikaners, without compensation. And there was a genocide against them because there is a problem with murders on farms here because South Africa has a high crime rate. Now, that's been quite widely ridiculed in South Africa and also elsewhere because Afrikaners are some of the richest people in South Africa. 5 of the 7 billionaires are Afrikaners, many CEOs are Afrikaners, and there are many rich farmers. And at the same time, he's been slashing aid for HIV programs in South Africa and aid and humanitarian assistance around the continent, which mostly benefits black Africans. So it's caused a lot of divisiveness, both in South Africa and elsewhere. And it's created a huge problem for the South African government, which is trying to maintain its relations or repair its relations with the US at the same time as dismissing these allegations.
And I don't know what your take was on the Musk interview at the Qatar Economic Forum. We've just been hearing some of it, Anthony, and it really was tense, especially when it turned to South Africa. How much is the government's plan to offer Musk this workaround of the black ownership laws for Starlink likely to actually ease tensions with Donald Trump?
Really, it's not going to be more than a Band-Aid. First of all, we don't know that Trump will accept the offer. Our reporting shows that an offer will be made to give him some sort of exemption from black economic empowerment rules or black ownership rules. But those are really available to all foreign investors. Basically involves training or investment in local communities or all sorts of things. He has been offered that before. I presume a more concrete offer would now be made. But that's just for Elon Musk, who is an ally of Donald Trump. But the broader issue the Trump administration has with South Africa's affirmative action and black economic empowerment laws is that it sees them as DEI, which it opposes, and as a disadvantage to American investment. We can't really see the South African government rolling those back because they're pretty important to the black majority in South Africa, given the history under apartheid, and it's been a central plank of the ANC's policy since it took power in 1994.
OK, Bloomberg's Anthony Squazzini out of Johannesburg. We thank you for that context. Now, to other stories out of the US. President Trump says that a missile defense shield called Golden Dome will be operational by the end of his term. He says that the system may cost $175 billion overall, but the Congressional Budget Office says the bill could reach $542 billion over 20 years. Trump has appointed a Space Force general to oversee development and says Canada wants to be part of the programme. And the US International Trade Commission has voted to impose duties on imported solar cells. Modules from Cambodia, Malaysia, Thailand and Vietnam are set to be impacted after the agency concluded the imports harm domestic manufacturers. The fees will take effect in June. US companies have long blamed discounted imports from Southeast Asia for making it difficult to build and sell equipment domestically. And Alphabet's Google will offer its AI mode in search to all US users as it tries to keep pace with new rivals. Google has been making big changes to its search engine to ensure that its core product remains relevant. That's as its decades of search dominance come under increasing threat from AI chatbots. Well, those are some of your top stories this morning. But coming up on the programme, long-term Treasury yields have climbed again as fractious US budget talks keep the focus on the government's ballooning deficit. We'll be joined by Janet Mui from Brewin Dolphin for the latest market reaction. You're looking at futures pointing lower stateside, but pretty flat here in Europe. We'll take you even closer to the market open. That's next. This is Bloomberg. very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Oil jumps higher after a report suggests Israel is preparing a potential strike on Iranian atomic facilities, raising concerns about the fate of the US-Iran nuclear talks. The UK pauses free trade negotiations with Israel, adding to international pressure over aid and its expanding military operations in Gaza. Plus, Elon Musk tells us he is committed to leading Tesla for the next 5 years. And on political spending, he says, I've done enough. Well, welcome to Wednesday. Let's check in on these markets. And we've got futures pointing lower stateside, but pretty flat here in Europe. We've had this run on Wall Street, the rally, taking a bit of a breather yesterday after the 6 days of gains. It had put the S&P up almost 20% from its April lows, but that looks set to falter more today, in part because of the geopolitical headlines. And you can see their impact perhaps more in the cross-asset picture. So let's flip the board. Oil is up at its highest level in a week on a report that new US intelligence has suggested Israel's preparing for a potential strike on Iranian nuclear facilities. Traders piling into haven assets like the Swiss franc and the yen at the expense of the dollar. And then meanwhile, you've got the US 30 yield still hovering around the 5% mark on these concerns about US fiscal largesse. We can get more on that now, and the general macro situation stateside with Valerie Teitel. We've had two Fed officials calling again for patience before the central bank considers cutting US rates. Val, what are you looking at?
Look, you've got those Fed officials urging patience. You also have the bond market urging restraint on government spending as this tax bill continues to make its way through the House. The real focus this week has been on the long end, those 30-year yields, again, hovering near 5% as we're just a bit more concerned about the amount of spending that's entailed in this tax bill. Now, that's one theme of the market. You also have to keep your eye on what's going on in the JGB long end. This is the Japan long end. Those 30-year yields have really spiked higher this week, and that's really adding to pressure on those U.S. Treasuries as well. Now, the other theme of the markets of late has been dollar weakness. Take a look at the Bloomberg Dollar Spot Index over the last three sessions. So over the last, just to start this week, down over 1%, near 1.2% declines for the Bloomberg Dollar Spot Index. This is also due to the fact we've had those tax bill hitting a snag in the House. So keep an eye on that. I also wanted to point out a chart to you, Lizzie, on long-term bearish positioning in the dollar. Take a look at this chart. This is a measure of options positioning, bearish to bullish. And you can see here that we're now at the most bearish positioning going back all the way to 2011. Near 15 years of data, we've not seen investors positioned so negatively on the dollar. It kind of chimes with a note that we got from Morgan Stanley saying, yes, buy America. They've upgraded their call on U.S. stocks, but do it on a hedged basis. Keep your dollar exposure hedged.
All right, Bloomberg's Valerie Teitel. As always, we thank you, and you can get Val's charts at GTV Go. Well, let's continue our markets conversation. We have Janet Mui, who is head of market analysis over at RBC Brewin Dolphin, joining us. Good to see you, Janet. Let's start in the bond market. Is it right to be revolting against what it sees as U.S. fiscal largesse? Do you think we could see another leg higher on 30-year yields, or is 5% the ceiling?
Hi, good morning, Lizzie. Thanks for having me. I think the ongoing tax bill negotiation will be something to watch. I do think the market would put some pressure on the negotiation, but ultimately, I think if we get a big spending and tax cut bill going through, then obviously markets would be worried because you're going to see a lot more Treasury issuance over the next 10 years or so, adding to that budget constraint, budget deficit situation. And of course, we're watching closely inflation expectations in markets. And of course, we still need the tariffs on China to come down and things like that. So I do think there is, ongoing near-term pressure and concerns on the bond yield side of things.
Do you think more generally in markets, we're kind of too complacent about the risk of those trade tensions re-escalating, particularly between the US and China, particularly with it being unresolved still?
Yeah, I think absolutely. I think we have seen maximum protectionism and then having that scaled back down, which is great. And that is a big part of the driver of the rally. But I do think that there's a lot of complacency, and I mentioned China being, the thing that really would move the needle. And we're talking about a lot of grievances, not just on trade, but a lot of other long-term issues. So it would be maybe more difficult than markets have expected, the ongoing negotiation. And certainly we can't just be complacent that further tariffs will come down. And also the trade negotiations between EU and the US could be difficult and winding as well. So, yeah, I do think that there is complacency, especially after the recent rally.
So where you've cut US equities to neutral, Janet, is that more of a macro call or is it more about valuation?
I think it's a bit of both. Basically, we have been incrementally trimming our US overweight over the past couple of months. And we just feel that basically the valuations remain high, especially after the rally for the Max 7. We're still long-term positive on the AI theme, but we think that a lot of these companies, the size of it means that growing at a robust pace is actually getting more difficult. And of course, there's a challenge to that U.S. exceptionalism story. It's not the end, but there's certainly some challenge to that. And we also think that the dollar is likely to weaken with the gradual slow motion, de-dollarization that is going to happen. And on the other hand, we think Europe ex-UK equities are more attractive because interest rates are falling in the area. Valuations are cheaper. And of course, you got that big fiscal boost from Germany that is likely to close a bit of the growth gap between the US and EU over the past decade or so. So I think it's just about the relative valuations and relative risk and potential drivers from here.
Well, you say that it's not the end of US exceptionalism. Are we perhaps past peak optimism for US tech?
I think in the near term, a lot of questions on the earnings momentum for big techs. I think, as I said, I think there's some complacency on the tariff front. And I do think that the tariffs on China are still very high. And I think all of the tariffs impact are still going to erode some of that profit margins of big tech companies that are particularly exposed to the supply chain in China, for example. So I guess one part of that is the near-term earnings concern and also the challenge from China, from those innovative companies in China. I think the investors are still, there's a big question mark over the earnings trajectory. And as AI is a theme that is, I think, very relevant. We're still positive on the shuffles play because I think there's a huge moat around those companies that are in the supply chain of AI infrastructure. But on the application side of things, I think it's getting very competitive and could erode some of the pricing powers of some of these large tech companies, for example.
So tariffs potentially eating into corporate margins. But aside from tariffs, do you think that markets are underpricing geopolitical risk at this point? We've been talking a lot this morning about this CNN report that there's new US intelligence suggesting Israel is preparing for a potential strike on Iranian nuclear facilities. Broadly, geopolitics, is it being factored in enough?
I don't think so. If you look at how strong the market has recovered, I think markets are basically expecting the tariff news to come down, more potential trade deals coming, and economy to remain resilient, and not really pricing in too much geopolitical risk. I think part of that is because oil prices have come down, which helps with the inflation side of things in the U.S. So I do think that there are risks surrounding the geopolitical front that is not being priced in. I do think that we have a lot of good news, a string of good news over the past 2 weeks, and that there are maybe starting to be more focused on the negative side of news going forward.
All right, Janet Murray, Head of Market Analysis over at RBC Brewin Dolphin. Always good to speak to you, waking us up to the risks in these markets. We thank you, Janet. Now, Donald Trump has denied he's losing patience with demands to significantly boost the cap on state and local tax deduction as Republicans remain deadlocked over his giant tax bill. The US president met lawmakers yesterday to pressure them not to let the SALT deduction or differences over social safety net cuts stop the multi-trillion billion package.
Yeah, that was a meeting of love. Let me tell you, that was love in that room. There was no shouting. I think it was a meeting of love. There were a couple of things that we talked about specifically where some people felt a little bit one way or the other, not a big deal. I think we're going to get it done. I'm not losing patience. We're ahead of schedule.
For more, let's bring in Bloomberg's Jill Desis. Morning, Jill. How soon is a deal on this going to come? A route out of all the deadlock blocking Trump's one big beautiful bill, as he would put it?
Well, Lizzie, if you believe House Speaker Mike Johnson, he said just within the last hour or so, he's told reporters that they're very close on reaching a deal on all of this. He said they're very close on a lot of things. Obviously, wouldn't give a ton of details, but what we have seen elsewhere, Axios and Politico have both reported that it seems like they've reached some kind of an agreement or close to some kind of an agreement where perhaps that SALT deduction limit was raised to $40,000. So that's about quadruple the size of what it currently is. Obviously, this is a big sticking point for some of those Republicans, particularly in high tax states, New Jersey, New York, California. This has been a really big priority for them since 2017 or so. So again, that's at least like the latest reporting that we've heard now. Obviously, that's one of the big sticking points for this entire bill. So in that case, perhaps you see the House passing this pretty soon. Obviously, Johnson can't really afford to lose a lot of Republican votes here, considering Democrats are obviously deep in opposition on this. So if that's really the case, perhaps we see something quite soon. But again, obviously the situation is pretty rapidly changing. So we'll have to see if that kind of a deal actually comes together.
And how likely is it that the conservative hardliners are going to get the Medicaid cuts they're pushing for?
Well, I think, Lizzie, if you look at, more of that debate, it seems, a bit of a harder sell there. Obviously, a lot of the more moderate Republicans, particularly those that are in, much more difficult districts here, I think, are obviously incredibly opposed to those kinds of cuts because they think that it would lose them votes. It does seem like Trump is a little bit more on their side, saying, he doesn't really want, the Republicans to get sort of bogged down in concerns over Medicaid cuts in this particular bill. So again, if the Republicans kind of fall in line with some of Trump's demands to kind of get this over the line, if they've resolved those issues on SALT, presuming that's deep in negotiation, maybe it's those hardliners on Medicaid cuts lose out this time around. But again, obviously, a lot of this is still in flux, so we'll have to see how that comes together.
OK, Bloomberg News editor Jill Desis, we thank you. Keeping across all the latest out of Capitol Hill, and we'll have plenty more for you. Stay with us. This is Bloomberg.
This week, Bloomberg brings you live coverage from the Qatar Economic Forum. Bloomberg Horizons Middle East and Africa and The Pulse will be broadcasting live from the conference floor. Then, throughout the day, we'll bring you all the highlights from the key policymakers and market movers on the issues confronting the global economy. Live coverage from the 5th edition of the Qatar Economic Forum continues this week right here on Bloomberg Television. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, OpenAI, Softbank and Oracle have embarked on an ambitious journey to build one of the largest AI data centers in the world. In a new episode of The Circuit with Emily Chang, she speaks to Sam Altman and Masayoshi Son about how the $500 billion Stargate initiative came together. Here's a preview.
How did you get to talking with Masayoshi Son and Larry Ellison, and how did you all come together?
I did 2 kind of long trips around the world, and a lot of it was to talk to developers and governments, but a lot of it was also to just really try to get my head around the supply chain. On one of those trips, I met with Masa, and we got to speaking about what it would take to do compute at this kind of scale.
Hi, Masa. It's so nice to see you. What conversations did you have with Sam that led to Stargate?
Well, we have a shared vision of AGI coming soon, and we need compute.
Of all the bets you could make, why this? Why Stargate?
Well, I believe in the vision that this AI, the AGI, will change the mankind's life. in every aspect. And we are lucky to see this enormous revolution, and I'd like to be part of that. I get excited. Last month, I came to celebrate your winning and promised that we will invest $100 billion. And you told me, oh, Masa, go for 200. Yeah. Now I came back with 500.
Explain the math to us. How does it all add up to needing $500 billion?
Well, that covers the capacity we think we need for the next few years, given our growth projections. The interesting question is if we knew how to get $1 trillion right now, which we don't, would we be able to deploy that profitably in the next few years? And I'm not sure about that, but I feel confident we can make $500 billion of value back.
And you can catch the full episode of The Circuit Season 3 when it premieres tomorrow on Bloomberg Television. And you can also stream it later on Bloomberg Originals. Now, staying with tech, Marks & Spencer is expected to report full-year results shortly, and investors are going to be focused on the fallout from an ongoing cyber attack. Charlie Wells is here with an update. Charlie, what are you looking for?
Yeah, Lizzie, it should have been a great day for M&S earnings. They have been in the middle of a strategic turnaround, trying to expand their food options for consumers, give an uplift to the fashion brand that they have as well. And the market had been liking this year what it had been seeing there. Their share price hit a 9-year high in April. They're expected to report £840 million in profit later this morning. That share price, again, showing a lot of that optimism until Easter, until news that a cyber attack had hit the retailer. That sent their share price careening down as much as 19% at its worst, eating into about £1 billion worth of market value there. Now, that hack really ate into a lot of their digital operations. It has prevented their website from really allowing customers to make transactions for nearly a month now. Now, the market has really not been liking what it has been seeing on that front, but it was not just M&S. This really has shaped up to be a spring of cyber attacks on a number of retailers on the British High Street. We had that M&S disclosure of its hack over that Easter weekend. Just a few days later, you got the Co-op as well, saying that they had been hacked. And then a day after that, the upscale retailer Harrods saying that there was a targeted attempt on them, and then M&S disclosing some customer data vulnerabilities as well. So this has been a theme across that British retailer space, and it is no wonder that a number of risk managers, the number one risk that they cite for 2025 is cyber risk. This is more than fire. This is more than regulation. And you can see in this Allianz survey, it goes hand in hand with this issue of business disruption, this concern that there is a cyber attack and then a business is disrupted for a number of days, weeks, or even the month that we have been seeing M&S grapple with. And when you step back and you take a look at the figures here, $9.5 trillion in losses from cybercrime in 2024. This is a growing number. This is a growing concern for these risk managers. And getting into this space, we're seeing a number of European insurance companies, the likes of Beazley, of Chubb, of Munich Re, all coming in because of this concern from risk managers and because of this growing concern. So this is the backdrop that we have going into these M&S earnings. Investors, analysts, and even shoppers are hoping for more information about the cyber hack and what it means for the business.
We'll get these results at the top of the hour. Bloomberg's Charlie Wells with the context on what a headache cybercrime is becoming. We thank you. Now, to some other stories making news this morning. The UK Chancellor Rachel Reeves is set to hold talks with the US Treasury Secretary Scott Bessent this week as the two countries continue to finalise deals of their agreement on tariffs. The two are set to speak on the sidelines of the G7 finance ministers meeting in Canada, which starts today. The trade pact was hailed by US President Trump as full and comprehensive, despite only covering a limited number of sectors. And staying with the G7, Canada's new Finance Minister, François-Philippe Champagne, says that member nations have started discussing tariffs on low-value Chinese products. In a news conference opening the meeting in Alberta, he said that the agenda will include talks on coordinating actions, pointing to further steps to curb oversupply from China. The US has already targeted these items by removing the de minimis exemption for lower-value packages. Those are some of our top stories this morning. We've got plenty more coming up on the programme, so do stay with us. This is Bloomberg.
I think the Fed right now should not cut should not cut interest rates, and it's in a very difficult position to try to balance these things. There's a great deal of uncertainty, and there is a deterioration in sentiment, but really the actual economy. So they're in a difficult position.
So that was the Bridgewater Associates founder Ray Dalio on the precarious situation for the Fed, which of course factors in the oil price into the inflation trajectory. And this morning we've been having to factor in this latest report out of CNN that Israel is potentially looking at a strike on Iranian nuclear facilities. Now, this is according to US intelligence, but you have seen a bounce in the oil price. But I have to say, oil has been pretty volatile over the past 7 days because, of course, we've had the US-Iran nuclear talks happening in the background. Of course, the two are not unconnected, but you could see, if you get progress here, a paving of the way for more barrels to return to the market, a market that's already expected to be oversupplied this year. Obviously, an attack by Israel would hinder progress in the US-Iran nuclear talks. It would add to this volatility that we've been seeing in the Middle East, and indeed the Middle East is a market that supplies a third of the world's oil. Now, of course, the oil story, as I say, factors into the inflation picture. At the top of the hour, we're going to get the latest UK inflation numbers. So if you flip the board over, you can see what we're expecting. A rise at the headline core and services levels in April from the previous month. You've got to factor in the rise in energy prices in this month. And the expectation from the Bank of England is that you see inflation at the headline level rising to 3.7% by September. So way ahead of the Bank of England's 2% target. But interestingly, the expectation from the BOE is that you're not going to see wage pressures adding as well. Wage demands rising in line with that rise in inflation. Hence, at the moment, you've got traders factoring in 2 more cuts from the Bank of England, despite that rise in inflation. We'll see those numbers at the top of the hour. In the meantime, Bloomberg Terminal users can access all of these charts and the others that we've used throughout the show at Bloomberg GTV Go on your terminal. Stay with us for more as well from the Qatar Economic Forum. Later today, we're going to be speaking to Donald Trump Jr. and to Omid Malik from 1789 Capital. Plus, look out for conversations with Ted Leonsis from Monumental Sports and Entertainment and the TCW Group's Katie Koch. The opening trade's up next, though. Kriti Gupta, Anna Edwards and Guy Johnson will take you all the way to the market open. Stay with us. This is Bloomberg.